Hello, I'm Elizabeth Lumley from Finextra, and we're here at the SAP Financial Services Forum in London. And today I'm speaking to Marco Bosma of Rabobank, and we're going to talk a bit about working capital. So, how big an issue is locked-in working capital then?
Yeah, working capital has always been the focus for our bank, at least, to help customers solving it. In the large corporate area, it's been a topic for years, but we found a few years ago that actually in the SME market, mid-corporate size, that problem is far from resolved. So it's a big issue in terms of converting your working capital in multiples through your cash cycle for those smaller and mid-sized corporations. So we have a lot of focus on that to discuss with customers how we can improve that.
But how can that issue be addressed then?
Well, what we are working on is to build an integrated platform where you bring the data flow all the way from the moment that you actually book the order, generate an invoice towards the final payment and settlement. And that requires cooperation from the software side, companies like SAP, to work with us and the banking platform. So the moment an order is generated, the corporate actually prepares the invoice and sends the invoice data to us. We generate the invoice. It could be a digital invoice ideally, but we still see a lot of paper-based, and then we take it from there. So the whole flow between that point in time and the ultimate payment is becoming part of the relationship that we have with these customers.
So why don't we talk about benefits now? So first up, what are the benefits to corporates?
Well, the benefit to the corporate is, first of all, that in our research it shows that 25% of the bankruptcies are really due to late payments, and about 60% of the invoices generated in this sector are paid late, i.e. later than the 30, 60, 90 days that are on the invoice. So to make the process more efficient means that you don't leave these 5 to 10 working days on average that is still left in between the moment that the order is booked and the invoice goes out, to reduce that to almost instant billing. And then the additional benefits is that as a bank you have an insight in terms of the receivables outstanding that you can give back to the customer in real time. But the customer consequently can actually choose then to outsource his debtor management of the scene, but they could also opt for insurance of these outstanding invoices. And the last and not least is essentially they could opt to take a basket of those invoices and present them for early payment, so the receivable financing option. Now that receivable finance itself is not new, has been around for a long time, but to make it fully automated out of a platform that actually generates data from the ERP environment and is supported and serviced by the banking platform will, we believe, create a huge boost in making efficient use of working capital or efficient use of credit lines to corporates.
So now let's look at the other side of the relationship. What are the benefits to banks?
Well, the benefits for the banks are multiple, whereas at the moment we're mostly at the end of the value chain. And what I mean with that, we're processing payments essentially, which means that anything that happens between the point that the order is taken by the corporate and our payment, we have hardly any information about. And by bringing this to the platform, we can actually assess customers much better because we can advise them in how to manage that working capital in these different steps that I mentioned earlier on. And the next thing is, of course, that where we're now lending on an open account basis working capital facilities, we're able to package, or the corporate is able to package those receivables and present them much more as an asset. So where we go for naked lending towards asset-based financing, we can we can offer better rates and perhaps in most cases more credit than we used to do with the current situation.